Hey, welcome. Today, we're going to pull back the curtain on the Nepali stock market. Now, I know it can seem like this exclusive club with its own secret language, but I promise, by the end of this explainer, you're not just going to understand the lingo, you'll actually feel ready to start your journey as an investor. So let's get right into it. Does this question sound a little too familiar? Yeah, I get it. The jargon alone can feel like a huge wall. But trust me, you are in exactly the right place. Just learning the basic terms is the single most important first step you can take. Think of it like this. We're learning the essential phrases before you travel to a new exciting country. So where do we even begin? Well, first things first, let's talk about the actual things you can buy in the market. These are the fundamental building blocks for, well, pretty much any investment you're going to make. All right, first up, we have the sadharan share, or the ordinary share. And this one is a big deal. When you buy an ordinary share, you're not just handing over your money, you're literally becoming a part owner of that company. That means you get a say in how it's run and you get a piece of the potential success. But, and this is a big but, with that huge potential reward comes the highest risk. If the company were to go under, you'd be the last in line to get paid. Okay, this chart right here is perfect because it lays everything out so clearly. It really all comes down to a trade-off between risk and reward. Look over on the left. With that ordinary share, you're the owner. You're swinging for the fences, right? High risk, high potential reward. Then, all the way on the right, you've got the debenture or debenture. With that, you're basically the lender, the safe and steady hand. Your risk is low and you're the first to get paid back. And smack in the middle is the Agradikar share or preference share, which is kind of a hybrid of the two. So the question is, who do you want to be? The owner, the lender, or somewhere in between?
So you're an owner. How do you actually make money? Well, the magic word here is labhansh or dividend. Just think of it as your reward for being a part owner. When the company does well and makes a profit, they share a slice of that pie with you. Now, they can give you that slice as straight up cash, or they can give you what's called a bonus share, which is just more shares in the company. Either way, it's a pretty great deal.
Okay, so we've covered the what you can buy. Now let's dive into the how. As in, how does this whole thing actually work? We're about to explore the ecosystem of the market and meet all the key players who make it tick. So, how does a brand new share even get into your hands? Well, it all kicks off with something called a Vivaran-Patru, or a prospectus. The best way to think about this is like the company's dating profile for investors. It's got all their info. A merchant bank acts as the matchmaker, managing the whole process. And to make sure the company gets the funding it needs, the bank provides pratyabuhor, or underwriting, which is just a fancy way of saying they promise to buy any shares that don't sell. Only then, after all that, do the shares finally go on sale to you and me. Now, once those shares are out in the wild, you need these key players to keep things running. Your Dito Patr Dalal, the stockbroker, is your person on the inside, the one who actually makes the buys and sells for you. Behind the scenes, the share registrar is like the official scorekeeper, keeping a perfect record of who owns what. And the glue holding it all together is the Central Depository System, or CDS. Just think of the CDS as a super secure high-tech bank, but instead of holding cash, it holds everyone's shares electronically. It's what makes the whole system fast and safe. All right, we've nailed the what and the how. Now it's time to learn the language. Once you master just a few of these key phrases, you'll be able to follow the daily conversation of the market, no problem. You're going to hear people talk about bull and bear markets all the time. It's really simple. A bull market, or unnatonmukh bazar, is when everything's on the up and up. Prices are rising, the economy feels strong, and people are optimistic. A bear market, adhonmukh bazar, is the exact opposite. Prices are falling, people are pessimistic, and investors are getting nervous. Just picture a bull charging upwards with its horns and a bear swiping down with its claws. Okay, so how do we even know if we're in a bull or a bear market? We look at a market index, and in Nepal, the big one is the NEPSE index. Honestly, the easiest way to think about it is like a scoreboard for the entire stock market. It takes all the listed companies, mashes their performance together into a single number, and that tells us the general health of the market. If NEPSE is up, it's a good. Now, when you're sizing up an individual company, one of the most important numbers to look at is its Prati share amdani, or earning per share. You'll see it as EPS. This little number is like taking the company's pulse. It tells you exactly how much profit the company is making for every single share out there. A company with a strong and rising EPS is usually a very healthy sign. And you know what the best part is? You don't need a PhD in finance to understand it. The formula for EPS is beautifully simple. You just take the company's total profit for a period and divide it by the total number of shares that exist. That's it. That simple calculation gives you one of the most powerful tools for judging a company's health. Wow, we have covered a lot of ground, from what you can buy, to how the system works, and even the language everyone's speaking. So let's wrap this up by talking about what this all means for you and your journey. At the end of the day, the most important thing to take away from all this is simple. You've already taken the biggest and, frankly, the hardest step. By just understanding these core ideas, what an ordinary share is, the difference between a bull and bear market, what EPS means, you've built the foundation. Everything else is built on top of this. And that really brings us to the final, most important question. With this foundation in place, you are no longer an outsider looking in. You've got the tools to start exploring, to start asking questions, and to start planning. So I'll leave you with this to think about. What's your next step going to be?